Good afternoon, everybody, and welcome to our YouTube live session entitled Hot Stocks in a Volatile Market. My name is Glenn Tompkins. I will be your host for this session, and due to our last session with the Hot Stock panel, you guys loved it so much that we decided to go do it again. This time, I do have a mixture of new and old instructors that were here last time, and a new person here as well. The VectorVest software, we are a stock analysis and portfolio management software. We've been around for 30 years, and what you're getting here is a glimpse of some of the flexibility and the power behind the VectorVest software, and how the instructors that are here will use that power to put into your hands some really good stocks to trade through a volatile market, but they're going to be hot stocks. Let's talk about the people that are here. If you're looking at all the way at the end, the big tallest person here, man, he looks like a big guy in a little chair, but it's Jerry D'Ambrosio. Jerry has been here for 13 years. You're going to get a lot of insight as to a lot of the expertise behind the four of us that are sitting here. Once Jerry talks about his stocks, he'll do a little bit more of an introduction of himself. Next, we have Steve Chappell, which is the Director of Trading Systems Development, TSD. Told you I would remember as long as I could put those letters in my head. Steve has been here for 18 years, and he happens to be one of my best friends, actually, and a mentor to me. And he's got a, say again?
That's cute.
It is, it's not, it's true.
He doesn't like us.
I don't like you guys as much. I like Steve a lot more, favorites. So there we go. All right, so Steve is gonna have a couple of picks to look at. Next to him is Jim Penna. As he just said, I didn't like him as much, but that's okay. Jim is our manager of retirement. And as you look at just these three people in and of themselves, Jerry's perspective on how to pick stocks, Steve's perspective on how to pick stocks, and Jim's perspective on how to pick stocks are going to vary a little bit. So you're going to get different perspectives, and from the standpoint of what we're here to do, that's going to be good for you. And my name again is Glenn Tompkins. Oh, by the way, Jim has been here for 12 years. My name is Glenn Tompkins. I primarily do a lot of webcasts. One of them most people may know me from is the Training Tuesdays for the navigational series. If this is the first time you get to see me as opposed to just hearing the voice now, you can put a face behind the voice. And I have been here for 15 years. As I look through all of us, you're getting at your disposal right here 58 years worth of experience. That's a lot of time between four people. 58 years of experience, and this is what's going to make this panel that more exciting. You're going to be able to walk away with confidence, knowing that some of the stocks that we're going to look at may fit you, and depending on your perspective on how you trade, you're going to find a stock that you're going to be able to use in a volatile market. So thank you all for being here today. Thank you all for showing up in force to support this this presentation, this live stream. And you know something? What we need you to do to keep this going, we need you to like, share, and subscribe. Biggest thing, subscribe to the channel so that you can really get an opportunity to stay on top of what we do. What we're going to do at this point in time, we're going to start. And we're going to start with me. All right? Me being your host, I'm going to get my stocks done. And we're going to talk about it. And after we talk about each stock, everyone's going to have an opportunity to talk about it. So it's going to be a little bit of a round robin. And based on perspectives, we may have different thoughts on the stocks that we picked, that each other picked. So we get to have that insight, and you guys will chime in as well. The first stock that we're going to look at is SAIA, Saia. Saia, as you can see, is in the transportation truck. Now, the reason why I picked the three stocks that I did, I took it back to a little bit more of simplicity, okay? If you know me, even when I do the strategies of the week, the simpler it is for me, the simpler I can make it for you. So the stocks that you're going to see that I chose were really based on the top industries in the market. And I looked through those top industries at the stocks. I took a look at the stocks and I looked for certain criteria in order to call it a hot stock. And keep in mind, the second part of it is in a volatile market. So what I was looking for are nice steady movers moving from the bottom left to the top right on the graph in as smooth as possible, because when you get into a volatile market where the market's going up and down, you want to find stocks that have the persistence of consistently moving up even when the market is volatile. So the first stock was found in a transportation truck. I'm going to go back to the home page momentarily. You'll notice the stock that I picked was in the number one industry in the market right now, which is transportation truck. All right, so that was one reason why I picked it. Go back to the graphs. Notice that I have a couple of things on the graph. One, I have support and resistance. This solid line serves as a good level of resistance, watching the stock finally break through, number one. Number two, I am looking at a 20-day exponential moving average. It's serving as a nice level of support or trend on the stock. Knowing that I'm looking at a 3-month graph, this moving average has done a good job keeping you in the stock. Down below, earnings per share. Why earnings per share? Because earnings is the engine that drives the stock's price higher. Put those things together, this serves the purpose of looking at a hot stock and most likely still moving from the bottom left to the top right. Nice smooth pattern, breaking through resistance. Now, what's going on today? The stock's going down. Does that take it off the table for it being a hot stock? The answer to that is no. The stock is still above that 20-day moving average, exponential moving average, which was one of the characteristics that I was looking for. How is truck industry doing today? It's actually going down a tad bit today, as well as the stocks as well. But look at the graph. Is this a stock that you would be comfortable in? Answer is probably to that is going to be yes, but today is not the day to buy it. And where did it pull back? Right at resistance, right here at the high. So what I'd like to see, if the stock can continue to move higher, break through that high. Remember, that's a high over the last 3 months. The stock is doing exactly what you want it to do, which is going up in price. The next stock that I'm going to look at is CVCO. That one happens to be in the building residential commercial. The stock was in a little bit of a channel and finally broke out, and now breaking out still above that level of resistance. Earnings took a little bit of a hit, but it's still moving higher than it was 3 days ago. Saia says Josh is just not a day trade. Yeah, it's not just a day trade. From over the last 3 months, again, bottom left, top right, a little bit more volatile than the first stock in that it did fall below the level of the 20-day moving average. Look at this though. It fell below on an end of day basis, no follow through. Fell below on an end of day basis, no follow through. So even looking at it from a perspective of still staying in the stock with the 20-day, and where did it stop? Right at support. Nicely bouncing up and moving higher. You know what I didn't do? I didn't give you all an opportunity to talk about the first stock, did I?
You did not.
All right, so I'm going to go back to that real quick. I totally forgot about that. I'm just talking. So that was my decision and the reason why I picked SAIA. All right, anybody have any?
Glenn, I think that it would serve them well if you told everybody exactly what price you feel the price should go above before buying it, because there is some resistance right at the top there.
Excellent.
It almost looks like at the same exact price. So what price is that? Everybody should be aware that they should wait for that price to be, price of the stock to go higher than that before they get in.
That's a good question, Jerry. So general rule of thumb that we use at VectorVest, on a stock at the price of about $90 or so, let's wait and make sure that we're buying into a rising stock. So you look at the high and put your order in about 12 cents higher than the high, which is about 1/8 of a point. That helps to, one, ensure that you're buying into the stock as it's still rising and it keeps on with that nice uptrend along with the 3-month graph. So about 12 cents higher than the high would be a great opportunity to put in a buy stop order. That way, if you're not at your computer, the order will trade. The order will trade or hit throughout the day, but you're buying into a rising stock. Any other feedback?
An alternative to that, because it looks like the next move might continue lower, would be to wait for it to hit the 20, like it did about 8 days ago. Hopefully it'll rest or kiss the 20, giving you an opportunity to put that same kind of an order above the kiss candle. Thereby, you're buying into the stock after it stopped falling and started to rise again. That may happen first before it takes out the high.
That's absolutely correct, because what did he have right here? A little bit of a doji cross right at resistance. The stock's price does have follow through. That is not a reversal pattern, is that, Jerry?
Doji's more indecision than reversal, but should be you should be aware of any doji, especially at the end of a trend.
Excellent. And I like Steve's idea of making sure that if it does pull back, that 20-day exponential moving averages serves as a really good level of support or a good trend line for the stock. And Jim, anything you want to add to that?
Yeah, no, I would just agree with these guys. I like the idea Steve said if it does pull back to the 20. Either way, however you play it, I do think that the buy stop order is the way to go on all these stocks to save yourself the trouble. But waiting till it gets through resistance or coming off that 20-day, just keep in mind the buy stop. I like it.
All right. So again, that was in the transportation truck industry, the number one industry. Number one industry. I'm going to go back to CVCO. That one is in the building, residential, commercial. And if I go back to the home page, that happens to be the number 3 industry in the software. So again, I'm using the power of the software to lock in to my hot stocks going up right now. What I liked about this, see that level of resistance? What did it do today? It broke above. The earnings is higher than it was 3 months ago, even with the hiccup right here, but still moving higher, nicely above the 20-day. Same kind of scenario. This one, and it's a $197 stock. This one, I'm more apt to say that it will hit the 12 cents higher first before pulling back down, in this case. In this case, nice open candle, very little wick at the top, so a nice strong day for the stock. All right. Anybody have any input on this stock?
I just want to answer a question that Mendy has. Mendy is asking, letting it bounce off the 20-day, can VectorVest software catch it at that point? Yes, in a way. You can scan for stocks that are within a certain percentage of a particular moving average. So as far as retracing from it, you're going to have to look at the graph to determine that. But you can run a search to find stocks that are maybe 1 or 2% above or below a certain moving average. If you need help with that, just give our support department a call.
Good question.
RMA.
All right.
RMA, yep.
But is the candle a dark cloud? Is that on the other stock?
It was on the other stock. I think it was SAIA. But no, Jay, it's not a dark cloud. Go back to that one real quick.
Wasn't that more like a one?
It's just a doji, Jay. You know, that red candle previous to today's candle is just a red doji. I don't really see a dark cloud. I don't see any bearish candlestick formations there other than just a doji, that just represents indecision.
And
no
retracing from resistance.
And just retracing from that doji, indecision leading to weakness. Steve might be right. It might come all the way back down to the 20-day before it breaks up and makes a new high.
All right.
Or it might keep going, so don't buy it just because it hits the 20. Wait for the bounce.
Right.
Yeah, wait. That's important. Wait for the bounce.
Yeah.
All right. Let's go to the third stock, which will be SAH in the retail auto parts. Retail auto parts. Going back to the home page again, and let's move this over a little bit. Retail auto parts, how about that? All 3 stocks that I picked were in the top 5 industries overall. Again, simplicity was for me, and taking advantage that VectorVest provides you with the best industries in the market, in the software at all times, was definitely exclusive of what I was looking for. And Paul says 3 green lights. Finally, RT went above 1 in the home page. Now the market can be officially called in an uptrend right now. Let's go to the last stock. 3 months. Nice upward move. over the last 3 months. Love the stair-step effect on earnings per share, nicely above the 20-day moving average. Right, doing the same thing again as SAIA, right at resistance. Let me tell you something, folks. Support resistance really works. And where is it retracing from? Right at that level of resistance. A small body, so not a big down day, but a red candle, a red bearish candle nonetheless. Same kind of scenario. If I'm not in it yet, let's see if it can go 12 cents higher than the high, or if it does pull back because it may have some downside, that kiss off of the 20 might be a great way as well. So either way, you have an opportunity to trade any of the stocks, and look at the body even got littler. Is littler a good word?
Smaller?
I like littler better.
Okay.
All right, it got a little smaller. And so that's where we stand. Any comments on SAH?
Well, just one thing, just a quick observation. I think it's fairly common. When a stock breaks out of a long-term channel like that, number one, it's a great time to think about buying it. So we're all, you're right on top of that. It's also very common for price to want to retest that area. So that might be what you're seeing. But so I like your idea. Either buy 12.5 cents above the prior high, or here again, wait for the retest to the moving average or to the what is now support. And use that high price of the kiss candle and buy from there.
And actually, this one doesn't show nearly as much weakness in today's candle as SAIA did.
Right.
It's a down day, but not extraordinarily big down day.
Yeah.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.